Fresh off the government's housing announcement yesterday, we're getting a better look at the real estate market in this country. New data out today shows August was the busiest month for Canadian home sales in 4 years. The Canadian Real Estate Association reports just over 40,000 home sales across the country last month. That's a 1.9% increase from a year earlier. Home sales were also up 1.1% month over month, marking the 5th straight monthly increase. CREA is forecasting the trend could accelerate this fall with the potential Bank of Canada interest rate cut. I want to bring in Daniel Foch. He's a Chief Real Estate Officer at Valery.ca. Hello, thanks so much for being with us. So what did you make of the numbers?
I would say that, the headlines seem to be relatively optimistic, but I am of the perspective, I think as the saying goes, don't call it a comeback yet. I think that CREA is definitely correct that we will see a gradual recovery in sales volume because prices are coming down, interest rates are coming down, and housing is becoming more and more affordable for more buyers. But what we're seeing right now is, home sales are up, 1 to 2% on a month-over-month or year-over-year basis, but new listings and active listings are up significantly more. Active listings are up 2.6%, new listings up 2.6% month-over-month, active listings up like 8% year-over-year. And so supply is still outpacing demand, and we're trending closer to a buyer's market, which should gradually give more affordability to buyers and hopefully continue to see growth in those sales numbers.
So how much, if there is in fact a rate cut this week, how much of an impact could that make on home sales across the country?
I would say we're sort of at a fatigue point. I think when you got the first couple of rate cuts, it really did create a lot of restoration of buying power. The rate cuts are much smaller right now, and they're in response to bad economic data. I think that house prices falling and interest rates falling kind of have the same impact. I think it will restore some affordability, but I don't think the sentiment is there for some sort of really strong recovery. If you look back to past housing cycles like the 1990s, it takes a long time for buyers to feel confident that the market is actually going to recover. And I think we're still a long ways away from that.
Daniel, the main goal of the government's new housing plan is to increase affordable housing. Big announcement made about that yesterday, $13 billion. How do you see that playing out? Will that, what will be the impact of that on the market overall?
I think that, there's two opposing views. Number one is that it'll create a lot more supply. I think they're targeting 4,000 homes, which is really a drop in the bucket when you think about the hundreds of thousands of homes that we actually need per year. But if they can create more supply, that should have downward pressure on prices because it relieves some of that excess demand that pushes prices up. But the opposing view is that when the government gets involved with things, they tend to spend a lot more than the private sector, and that could actually be inflationary on construction because they're typically not the same project management skills, et cetera, as a private sector developer, and they could end up spending more, pushing construction costs up and being inflationary. So I think it remains to be seen the outcome of the policy, but I think that their heart is in the right place. I guess we'll see whether or not it actually results in creating more affordability.
Daniel Foch is a broker and host of the Canadian Real Estate Investor Podcast. Thanks so much for being with us. So